back the Meenakshi coal mine, or RVNL, which is the L1 bidden for a 137 crore project. Could be interesting. Pratap Snacks has seen a fire at the Jammu manufacturing unit. So this one could be under maybe a bit of a cloud. And Ease My Trip certainly looking wobbly in the pre-open session. Promoters sell 14.21% stake. This consistent stake sale by the promoter doesn't augur well. I wonder, I know Ease My Trip is lower. Can we pull up Pratap Snacks and just see what that one is doing as well in the pre-open before we get to the market open as well in about 14 seconds? Because I know Ease My Trip is starting off lower. Pratap Snacks about a couple of percentage points lower. Okay, let's get the market open rates up on the screen. This is how we're starting off on the last day of 2024. Boy, what a year it's been, and what a start. 0.4% or a third of a percent lower, in line, I think, with what the implied open was suggesting earlier as well. About Nifty IT is the main culprit, 1.5% lower, with banks down about 0.5%. Mid caps and small caps would be under a cloud as well. I wouldn't be surprised at all. 0.5% for the mid cap index, maybe 0.5% or 0.25% for the small cap index. So the breadth maybe not as terrible, but pull up the heat map. I want to see which IT names. So, okay, everything is down. Tech Mahindra, HCL Tech, Infi, TCS, Wipro. This is a bit of a basket selling that's happened on IT. Large losses there, or a number of stocks, all the heavyweights under a bit of a cloud, and which is why Nifty IT is doing what it is doing. Adani Enterprises cools off a little bit. ICICI Bank, Axis, yesterday's key losers continue to lose as well, though HDFC Bank is probably not doing as badly, about 0.33%. What about gainers? BEL marginally, Coal India marginally, ONGC. So old economy doing okay, but tech is certainly taking it on the chin today, Agam. And HCL Tech is now down 2% in trade. Clearly IT standing out in trade.
Yes, it does seem like the strength in dollar isn't exactly helping a lot of these sectors which are well exporting. But as usual, let's take a look at what's happening with respect to the broader markets and see how things are panning out. So I'll start off with the mid cap index, which is down around another 0.4%. The small cap index is also under pressure, though not as much. It's down around 0.3%. In terms of the big sectoral movers, well, while we do have a little bit of strength in the metal index, along with something like the CPSC, of course, CPSC has also undergone a little bit of change, which came through yesterday. We are looking at a significant amount of weakness in the Nifty IT index, which is the biggest losing sectoral index today, down around 1.6%, followed by something like a Nifty Realty, which is down around 0.7%, and Nifty Consumer Durables as well. We have a little bit of slackness for a lot of these financial oriented indices. So that would include something like the PSU index, or for that matter, the finance index. Nifty Bank is down around 0.4% too. But let's talk about stocks then. Now, right at the top in the news, well, we do know that we have Gujarat Gas, which is in focus. And based on that, we have weakness to the tune of nearly 2.7%. Ease My Trip, of course, that's where the promoter sells out a whopping 14% stake. Well, that's the reason why we are looking at weakness of as much as 8%, as you can see. Let's move on and talk about a handful of other companies which have seen order wins come through. Mazagon Dock up around 2.7% on the back of that near 2,000 crore order. And RVNL, the order is not very large, but it is trending higher by around 1.3%. RVNL has been declared L1 for a project for about 137 odd crores. Moving on, let's also put the spotlight on a handful of brokerage names. Now, Citi is looking at a whopping 74% upside on Vodafone Idea, but that really hasn't moved. The stock is down 0.5%. Also positive on Indus Towers, but that's marginally in the green. And Adani Wilmar is under pressure. This one is down 6%. Of course, the bulk of the news did come through in the last 1 hour of trade. I reckon that now is a time where we're starting to see a little bit more weakness after a lot of these investors have had some time to think over what this deal could potentially mean. All in all, not an amazing start to the final trading day of the year. One can only hope for a little bit of recovery, but for now, the start is certainly a bit less encouraging, Neeraj.
Most certainly, less encouraging for sure. And like we said, IT is the big culprit. Just a few stocks, though, which are moving around. ITI for the last few days has been doing well, up 6.5 or 7% in today's session. GMR Power is up 5%. Shriram Properties, which has sold some non-core asset, is up about 3%. There is strength in Godfrey Phillips, which is up about 5% in trade. So those are a few names that are doing well for themselves, including Traction Technologies too. EaseMyTrip is down 9%, no surprise thereof. Macrotech is down 5%, interestingly. So that is something you want to watch out for. But all of IT. Sunny, come to you first. Why this weakness in IT? Such a large slump. Is it the dollar strength? Is it something else too?
Yeah, again, no particular development as far as the IT sector is concerned, maybe year in adjustment or something. But again, IT, as we discussed earlier, also, I think the worst is behind as far as IT sector is concerned. But having said that, even the earning or the top line growth outlook for next year is a kind of kind of high single digit for large cap IT name, and maybe a mid-teen number for mid cap IT companies for FY26. In fact, what I feel is that post Trump administration taking charge, there is a possibility that the corporate tax burden can be reduced in US, and that can give some boost to the IT budgets for calendar year 25 from corporate base out of US. So I think overall things look relatively better for an IT company as compared to the 6 months back. But again, I don't know. I mean, what's the reason for the correction?
No, fair enough. Okay. Let me just pick one other financial company, or rather financial technology company from this particular pick, and I'll take a technical view on this one. So Kunal, coming on OFSS, yesterday it made a new life high. Today again it is under pressure. What's the way forward here, and how are you reading cues here?
See, Agam, again, this counter is absolutely trending counter, but at the same time, the uptrend which we are witnessing on this is very, very slow and muted. I mean, we saw the similar all-time high on 6th of December. After that, we saw the same on 19th December. We saw yesterday also, and it's down today. But the trend is absolutely positive. So in such counters, we should always look at the support, which is right now at around 12,300. If someone is comfortable, can think of initiating buy near that level. Keep the stop loss of 12,000 in that case and ride the rally. We don't know, we might just see a gap up opening and a big spike on the upside, but one needs to play with cautious because muted trend is positive, but it's at the extreme elevated level, right? So risk reward ratio for any new position is definitely unfavorable, but for trend followers, it's all okay. 12,300 can be the good level to think of initiating a buy.
Yep. I don't know, NASDAQ, this, that, what have you, but there is clearly an issue today with the IT stocks for sure. Kunal, anything else that has stood out for you on open?
So Neeraj bhai, I personally like HCC a lot at this level. The only reason for me to pick up this counter is that on 25th October, we saw the extreme lows of 35.5. After that, we saw 49 on the screen. Again, it's back to near to those levels. And today, it has started with a good volume also in the first 5 minutes itself. And the stock is up by around 1%. So considering the extreme low as a stop loss, that's 35.5. One can think of initiating a buy. Here, the risk reward for the long is extremely favorable and it's a positional bet. So with the stop of 35.5, one can initiate a buy. I think the first conservative target can be 41. And above that, the previous highs of 46 to 47 are also likely because the trend on the last 1 year chart is extremely positive and the counter is near to the support. So that's the first counter. And the second, which I like the most at this level, is REC. Again, sideways consolidating counter near to support level itself with the stop of 495. One can initiate a buy on that also, and the targets can be 540 to 545.
Okay. The second worst performer today, and the all cap, is Adani Wilmar. And just want to pull up we know the news now, but just getting the JP Morgan view there on Adani Wilmar up on the screen. It's down 7%, by the way, second only to EaseMyTrip. They have an underweight rating, target 320. They're saying that one, of course, the Adani Enterprises is going to exit, which is because of the compliance issues, but otherwise also. But I think the reason seems to be that if Adani is out of this venture, then maybe the relative attractiveness, so on and so forth, might not be there, and therefore, I presume that is why Adani Wilmar is seeing this sharp downtick, or maybe because of the pricing as well, right? the option pricing, so on and so forth. So, Sunny, what, to your mind, what explains this weakness today in Adani Wilmar? And what would you do with the stock, let's say if you had it in your portfolio?
Neeraj, again, if you look at the business profile of Adani Wilmar, it's a predominantly an edible oil business under the brand of Fortune, close to 3-4% EBITDA margin. Although they are trying to diversify the portfolio on the food as an segment, which is relatively a better margin profile. But on a quarterly basis, edible oil contributes close to 11,000 crore kind of top line, and the food is still at 1,500, 1,700 kind of number. So I think there's a long runway before where we can see a dramatic shift as far as margin profile of the business is concerned. And coming to valuation, I think the annual run rate in terms of profitability for this company is close to 1,200 crore, and the market cap is close to 40,000 crore. So I think trading at an expensive valuation, I mean, there are many better FMCG names which are available. So we have seen a very good correction in the names like Asian Paint, Nestle, or for that matter, other names which are looking relatively better, such as Medicure. So if I have to play FMCG as a sector or consumer staple as a sector, why not to go with another name where there is still a better opportunity in terms of growth potential, as well as in terms of the kind of construct of margin and ROE profile which these companies enjoy. So I would like to avoid Adani Wilmar at a current juncture, and would rather focus on other FMCG name if I want to add any one of the stock in my portfolio. Better to focus on ITC, where we are seeing a demerger of hotel business. So recently we came out with a note also. So we believe the fair value of the hotel business in terms of share price will be in the range of 120 to 160 rupees. And post demerger, although there may be an overhang in terms of the likely increase in taxes in the budget, but we still feel the fair value of ITC post demerger continue to remain 550 rupees. So ITC, I think risk reward relatively looks better as compared to Adani Wilmar.
Sunny, I want your view on stock market related entities. So, brokerages like Angel One, Motilal Oswal, something like a depository like a CDSL, or even an exchange like a BSC. Anything that you find interesting around at these prices, or do you want to wait? What is your overall assessment of this particular segment?
Coming to, capital market as a story, I feel we have seen a 20 to 30% dip as far as volumes of F&O is concerned. So the companies which are brokers which are dependent on future and options as then key revenue drivers such as Angel One, there we may see a kind of temporary bump in terms of earning growth. So I would like to write this story at a current juncture through MCX Multi-Commodity Exchange, which is predominantly a market leader as far as commodity trading in India is concerned, and the kind of outlook which gold and silver is having. I feel the volume uptick on option front for MCX is something which I feel will continue to scale up during the next 6 to 12 months. So MCX among the exchanges I would like to add in my portfolio. And one name post listing of DAM Capital, which is predominantly an investment banking business. IIFL Capital, which is again a mix of kind of wealth management, investment banking, as well as institutional broking. So IIFL Capital looks relatively cheaper in terms of valuation. So IIFL caps I would like to add. Angel One, again, maybe a quarter or two, we may see a temporary bump, temporary speed bump in terms of earning growth. So if somebody is a long-term investor, Angel One can be looked upon from a long-term perspective. Maybe gradual accumulation is the right strategy as far as Angel One is concerned.
Okay. All right. Well, there you have it. That's the view coming in on a handful of these stock market related companies. Okay. Maybe we can take a look at something like some of these, a sector, in fact, which has done very well, and that's the EMS space. So I'm going to actually, direct this question to, Kunal, on something like a Dixon Technologies. Now, I personally spoke to the management of the company very recently, and well, the projections are very, very positive. But Dixon Technologies, on a fundamental basis, it's a very expensive company. Well, naturally, to a certain extent, this is one of those few companies where growth does seem to have a short in terms of probabilities playing out. But in terms of technicals, is this a time where you could potentially go short? So, Kunal, this question is for you. I know that the company has been on a very, very sharp uptrend. Would you go short at least on a medium term or a short term technical basis?
So Agam, again, as you rightly mentioned, trending counter. But at the same time, if someone wants to speculate for the short term, then the support immediately on the chart is 17,600. Below that, one can definitely think of shorting this counter. The stop of then in that case will be 18,250, and the target will be the trend line support, which is near to 16,300. But again, while shorting such trending counters, one just needs to keep in mind that one should not be waiting positionally to make a really big. If there is a lower spike and it's in favor, trail the stop loss immediately and book the profits near to the support, which is right now at 16,300. Considering these levels which we discussed, one can definitely think of going contra on the major trend of the company.
Okay, well, on that note, we will leave it at that. So thanking both our experts for joining us and taking us through their views,
Thank you so much.
both Sunny and Kunal. Also wishing you guys a very happy new year. Well, we'll see you in the new year. And well, on that note, we also shift focus to corporate conversations. The first one on our radar is Texmaco Rail. And well, we wanted to talk to the company for many reasons, but before we get the management in, I'm going to ask my colleague Anushi to join us to tell us what this conversation could be in store for us and perhaps give us a little bit more of a setup. Anushi, over to you.
Hey, a very interesting company to look at. The company Texmaco Rail and Engineering Limited is involved in the business of manufacturing of rolling stock such as wagons, coaches, loco shells and parts and more. They have 7 manufacturing facilities, which includes 5 freight car and component facilities along with 2 foundries. The H1 of this particular year, if we see, has started on a very strong note. We are seeing a 67% of a revenue growth, EBITDA about 145% of a growth, margins improving to 9.82% compared to 6.7% of last year, and net profit also stood at around 133 crore. The operational highlights of the company, if we see, is wagon sales that stood at about 5,301 units. Freight car division sales were around 2,108 crore. The company has, if you look at the net debt to equity levels, also very comfortable levels that we are looking at. In fact, has a negative number in the 2 periods, that is September 23 and September 24. But the highlight of this year, if you are to see, which has led to this, one of the reasons of this kind of performance that we are also looking at is the acquisition, the Texmaco West Rail, which was previously known as Jindal Rail and Infrastructure. We have successfully completed the acquisition in September 24 of this year, resulting in revenue increase of around 1.7 times. The order book of this company stood at around 8,194 crore, with the freight car division contributing to around 59.4% of the mix. Onto the outlook forward for the business, the focus would remain on the Indian Railways side and the private sector side on what the production capabilities could mean for the business going ahead. Margins improvement, they're expecting around 12 to 13% over the next 1.5 to 2 years. And more on that, what could also be addressed is on the infra, rail and green energy segment, on what is the plan for this segment going ahead. So this is an overall view that we are seeing. The recent one and the most remarkable thing that has happened in 24 is the acquisition and the outlook forward for the company.
Okay, thanks a lot for that, Anushi, and let's get in the management to speak about this and more. Mr. Indrajit Mukherjee, Vice Chairman, Texmaco Rail and Engineering, joins us right now on the show. Mr. Mukherjee, it's been a while, but good talking to you on the last day of 2024. Thank you so much for joining in Neeraj here. Good morning.
Good morning, Neeraj. It's a pleasure for me to be talking to you on the last day of the year.
Yeah, well, one can surmise this year, Mr. Mukherjee, in a way that relative to the high expectations that people had, maybe order flows, maybe bookings, maybe delivery didn't quite live up for the space at large. No, I'm not just talking Texmaco per se, but the space at large, because I think 2023 spoilt everybody for what the rail sector can do. I would love to know if you think in a similar fashion, and do you think that the things might change a little bit relative to the heightened expectations again that the street has from the sector?
Well, I think my take on this is we are in the middle of the National Rail Plan, which was from 2023 to 2030 end or 2031. We are just in the middle of it. so far, the segment has walked the talk. The railways have walked the talk. I think recapping this year has been very rewarding for us. We enjoyed our growth, and while the tailwind is so strong, we wanted to consolidate our position, which we did. Going forward, I don't expect that it's going to be the same way, but I think the railway spending is not going to come down because if you look at the last year's budget, it was about 2.4 lakhs crore. So I think what's going to happen is that maybe the money will be used for not only for rolling stock from the freight cars in which we are very predominant, but maybe in some other segments. And that's the reason why as you see, that we have started looking at the railway EPC business, electrification, the adjacencies, the components, etc. Because we think we need to expand the width of our products, and so the business may not have the same strong tailwind, but it will be encouraging for the coming year to come because I don't think the railways are going to stop a growth plan suddenly. So that's my speculation, and that's what we feel about the segment.
Got it. Mr. Mukherjee, sorry, when I was talking about the year, I didn't mean your individual performance, by the way, because your first half performance has looked rock solid. But I do feel that the pace of order awarding that we were used to nearly for a better part of FY24 and maybe the first quarter of FY25 as well, that has ebbed a little bit. Would you agree? And do you sense that it could pick up?
I think you're right. The railway orders will not have the same strength and vigor that it had this year. But at the same time, the private players who buy their own wagons because of the transportation of the goods like cements, coals, iron ore, etc. That is finding a very strong wind that's coming up, and that segment is growing. While the railway segment, we don't expect the same way that as last year, but the private segments will go. How much will it compensate? The whole numbers is something which we are yet to see. It may not be at the same level, but there is another thing that's happening. See, there's so many wagons are going into particularly the freight cars, going into the system. It's creating a problem of congestions. So I think the railway have to also spend money in building up the infrastructure. And I think the spending may get little shifted from the wagons into the infrastructure. As you know that we are present in both the segments. So I think there will be a little bit of shift, but overall may not be with the same level, but it's going to be it's not going to go down drastically, and that's our speculation, our forecast.
I just want to refer to what Mr. Mukherjee was talking about. That's the National Rail Plan Vision 2030, pardon me. And what that entails, right at the top, the vision is very clear that they want to increase the modal share of railways in freight to 45%. Now in 2023, the share of freight from roadways was 66%. So naturally, railways still has a little bit of a way to go before it comes to the mark of 45%. And, and to a certain extent, Mr. Mukherjee has also addressed a part of my next question, that is to do with railway infra. Mr. Mukherjee, can you give us a better idea, a little bit more color on the role that Texmaco can play in providing that infra as well? Because you've suggested that there is congestion. In that case, do you think that your role in infra, building infra, could perhaps expand over the next year or two?
Absolutely, absolutely. See, if you look at firstly that our electrification, that's one of the areas where we are very strong, with a very strong credentials. and that's growing in leaps and bounds. If you look at the two dedicated freight corridors which have been built, one is the Western dedicated freight corridor, which is almost getting completed, and the Eastern dedicated freight corridors. In both, we are the major players in building. It's as you know that it's been built by a consortium of Texmaco and two other Japanese partners. That's those freight corridors are not yet populated. So they need to be populated, which obviously will bring in the requirement of wagons. But in the main segment, which is the take something very close to our home, which is Eastern segment, the coal movement, the iron ore movement. These are the places where there are congestions. The tracks are to be laid. It has to be speeded up. At one time, in fact, railways were thinking of advanced wagons which can take higher load and higher speed, which is now on hold. But I'm sure that's going to come up. So, answering your question, there are going to be more track laying, there will be signaling, which will bring into signaling, there will be electrifications. And Texmaco as a company are very strongly present in all that. We are present in the electrification through our Bright Power, we are present in the railway, other EPC through our Kalindi division, which actually incidentally we are also mulling the idea of demerging because its core competency requirements are a little different from the manufacturing. So I think we are very much there.
So a point taken on that one as well. So, and you also had a tremendous first half this financial year. I understand you cannot talk about the third quarter. I reckon that you will be in a silent period with respect to the earnings there. Still, so a 66% growth in your top line. And would it be safe to assume that the growth rate could perhaps moderate just a tad bit? If you could give us some sort of an idea of what it could be, not just for FY25, but going into FY26 as well.
Well, we are expecting the growth in more or less in the same manner. May not be all contributed and driven by the freight cars. It could be also driven by our other SBUs which we are building. For example, we are looking at very strongly at a design and we are building our global capability center in New Delhi. We also are looking at export market. And as you know that we are a very major player there in the export market. We just completed a very large order from a very prominent steel makers in Europe. So I think I expect that the growth will be sustained, but deliberately we would not like to put all eggs in one basket. So we would like to have more diverse products connected, not something not connected, so that we have a higher width of product and we get ready for the future. And that's going to be continuing even in 26. 26 a little too long. Maybe we may be moving from freight car to even to passenger mobility.
Mr. Mukherjee, I have two more questions. One is various reports from experts who track the changing railway industry in India and forecast growth projections until 2041 as well. I don't know how people can look that far out, but my question to you is, do you have, do you believe that there could be a basic growth rate that could be achieved and something that you can forecast for a slightly longer term? I mean, could you, for example, grow at, let's say, a CAGR of 20-25% or slightly more or slightly less for maybe the next 5 years? Is that possible?
I think I have to take a shot, but I must tell you that you are right on the head of the nail. The National Rail Plan, if you look at the numbers, it's talking of about 20% growth, so per year. So I think we would like to be sustaining this growth, but as I would like to repeat, that it may not be only in the field of freight cars, because I think it would be very difficult to achieve that growth through freight cars on a 20% basis on a sustaining 4 to 5 years. But railways is something which is growing up. You must have also seen that even railways is thinking of PPP in railways. So the funding positions can be different. Railways also at one time were thinking of maintenance through the private sectors or through public sector companies. So actually, which also is easing the burden on the union budget for the capital expenditure. So I would expect this segment will grow, but and it will grow at the same kind of a number, but it may not be driven in our segment. In our case, it may not be driven by the freight segment, but railway as a whole, I think I would tend to agree with you that it would be growing at that level, because this is one of the main infrastructure in the country. That's the railway, and that's a focus. It's not only improving the cost, it's also reducing carbon emissions, and 5 years down the road, I think that's what is going to be the priority of all the nations.
Interesting. Well, I do wish you all the best for that, Mr. Mukherjee. I have one final question though, if you can, and that is on, I think the sister concern, I don't know if you're in a position to be able to answer or no, but I'm asking you nevertheless because you are here, sir. There was this talk of some land parcel which is there under Texmaco Infra, which you might enter into a deal with. Or that company may enter into a deal with. I don't know if you are clearly associated with them in a direct capacity or no. Any idea about that? Any truth to the same?
I can make it very clear, absolutely very clear about it. Texmaco Infra is a separate listed company. Yes. And we have an arm's length relationship with them. But I must tell you that within Texmaco, we recently have been trying to make ourselves efficient by putting the factories and the layouts together so that we become more efficient. And in that process, we realized that a prime piece of land which is located on the highways on Calcutta is something which we would not require for our production purposes. And we wouldn't, and this is well within Texmaco Rail and Engineering, we are very strongly thinking of developing that land because it's a prime piece of land, and which perhaps are going to give us fund which we'll use for our growth part of our growth aspirations. And as someone, that lady said already, that we have a very healthy debt equity ratio and we want to improve it further. So these are the steps which will make us financially more strong.
Sir, I'm just inclined. I'm sorry, I'm extending my appointment by one more question, but any details of this? I mean, one, the timeline, and two, what's the kind of numbers that such a development can throw up for you?
I think it would be a little premature to talk of the fund, but the timeline, yes, I would be most happy to do, because we also already started taking actions on that, and that's about 3 to 4 years time.
How large is this land, sir? If just that much, if you can tell us?
It's more than 11 acres.
11 acres. Okay, fair call.
Right on highway.
Right on the highway. Fair call. Okay, lovely. Lovely talking to you, Mr. Mukherjee. Thank you so much for taking the time out. All the best for a very good 2025, sir.
Thank you. I wish you all a very happy new year.
Thank you so much, sir.
Thank you.
That's Texmaco Rail, and interesting, Agam. Very strong growth rates. Also a non-core revenue source of a parcel of land.
Yeah, what stood out for me from the conversation, Neeraj, that despite the fact that the management is saying that the order flow could moderate from here on, their revenues will not. Because they're getting revenues from many other sources, and that, of course, is I'm sure a lot of investors will be heartened to know that. But yeah, there you have it. That's the management of Texmaco. But let's shift focus to yet another company, and this is from the pharma space. Medicure will be in focus, even as the company raises about 1,000 crores via QIP. Let's go across to Varsha, who is standing by to give us more details. Over to you, Varsha.
Thank you, Agam, for that. So, Medicure, which is a manufacturer and exporter of medical devices, if you see in the stock performance in the last 1 year, the stock has grown 87%. Well, let's see what is the reason for that, because there has been shift happening in medical device industry, which is an import-heavy business. Now, the shift is happening wherein India, with government support, is setting up manufacturing base. Let's see if this is seen in numbers. So, if you see Indian medical device export doubled to $4 billion in 3 years, and tariff on China devices increased to 50%, boosting local manufacturing, and Medicure is the direct benefit for this shift. Let's look at what is actually, what are the growth drivers for this company. One is recently they had raised 1,000 crores via QIP, which will be used to build three to four new facilities in next 24 months to expand their manufacturing capability, and part of the fund will be deployed into inorganic opportunity as well. Let's see what are the growth drivers for the company. One is renal business, which they aim to grow 50% in next 6 months, and they are on track to take this 90 crores of revenue from renal business to 140 crores. Market is growing at 12 to 15%, and company is not present in every hospital, so huge opportunity when it comes to renal business. Then cardiology and critical care, wherein they've launched 4 to 5 products in each category, and they're gonna launch more 5 to 6 products in the range of next few quarters, and they are actually expecting 300 to 400 crores of revenue from cardiology business by 2030. Lastly, if I were to talk about the guidance for FY25, they are expecting a revenue growth of 20 to 24% with maintaining the EBITDA margin of 27%.
Okay, thank you so much for that, Varsha. But let's now, get a slice of the conversation that Varsha had with the Managing Director, Himanshu Bed, talking about the road ahead for the company. Listen in.
What we see is, India has brought in regulations for medical devices, and they were implemented in October 2023. All the devices were regulated. And I think since that period, from 2021 to 2024, we have seen exports almost doubling, because that is where the regulatory landscape was kind of developed in the country. And with that, the trust on Indian-made devices also increased a lot, during this period. And what we see now is, with almost 3,000 companies manufacturing different medical devices in the country, I think India is poised to grow this industry quite strongly in the next 5 to 6 years. And our estimate is that, we should be, at least by 2030, we should be in the range of around $20 billion for exports. And a lot of large companies have set up bases in India. When you look at large multinationals like GE, Philips, Siemens, a lot of them have started making large equipments in the country. So we see a good traction, and I think the government has also come out with a lot of new policies in last few months, which is also going to push Make in India and for global markets.
Got it. And for your US business, you had guided $15 million to $20 million over the next 3 to 4 years. Any change in that, considering the huge opportunity that you are seeing?
See, the Trump government is not there, and I think let's see what the policies, how policies favor Indian companies. But I think we are going steady with our current approach, and we're not looking at this, spikes due to tariffs and everything. So for us, it's products which have already decided to push in the US market. So we still, maintain our guidance for that 15-20 million. So far, that's where we are, but we don't know what happens after 6 months.
Got it. Now, Mr. Bed, now this medical device industry has always been an import heavy business. Now, with this opportunity, the export opportunity or the shift that we are seeing, I'm assuming the imports will go down, number one, and a lot of other companies will actually set their manufacturing base in India, because I was just, analyzing it. A lot of EMS companies have also come out with, entering into medical device industry. Now, with this, how are you seeing this competition for you?
See, I think for our company, Medicure, I think we are very clear that company, works very strongly on the R&D. And I think as a company, we own around 300 plus patents. And that's the reason we are able to launch new devices which are differentiated, which have new technology, which have new ideas, which are created in labs. So for us, we are very much protected and insulated, with our core business currently, which is going strong. And I think when you look at import substitution, I think India will have more and more manufacturing in the low to mid-tech space. And I think that is going to happen in next few years, more and more. And of course, we may continue to import high technology products, which have origin out of the Western countries. But I think for the low to medium tech, India should be self-sufficient in next 4 to 5 years.
Got it. Now let's just narrow it down to the business. You are also focusing when it comes to your domestic business, which has grown 22% in Q2. What is the growth target set there for next 2 to 3 years?
See, I think domestic healthcare industry is growing between 12 to 15%, and we are very much dependent, on the healthcare growth in the segment. And we personally feel that with import substitution we are doing right now in India, especially renal space, oncology space, cardiology space, I think we will see growth upwards of 20% next 2 3 years in the domestic business. It could be more, but I think for the moment we're conservative and we're guiding over 20%. But as time progresses, we will revise our guidance. But that's the traction we see today in the domestic market.
Got it. And Mr. Bed, in one of your con calls, you were actually mentioning about the CDMO opportunities that you are envisaging. Now, are there any going discussions or collaboration with large companies in the CDMO sector?
See, I think this is again dependent on the US policies and on the outcome of the US, let's say trade, tariffs which come in or they don't come in, we don't know that. So I think India, with the lowest cost of manufacturing today, with a large talent pool of engineers, we have I think, good potential to look at this opportunity. Currently, we don't have anything on the cards, but I think in next, let's say 6 months to 12 months, we will definitely see something coming up.
Got it. Also, one of the growth drivers for the company is your renal business. Now, what's the market share there, current market share, and what are the targets for the market share that you have set in? Is there any competitor in India?
See, well, I'll just talk about the market share. So I think by this year, we should end up between 10 to 12% market share in renal space. And as time progresses, our target is to maybe get to around 25% market share next 3 to 4 years. And of course, there are few local players, very small ones. But yes, we have a couple of multinationals making products in India. They currently export out of India, but they may choose to also sell in India at some point of time. But the market is growing because government has come out the one nation, one dialysis policy, where the reimbursement rates have increased from the dialysis centers, and more people are able to get dialysis done through the PPP programs governments have launched with private players in different states. So, and with more and more people, suffering for, CKD diseases, kidney diseases, I think this industry is going to grow by around 20-25%, in coming years. So there's a lot of potential in this industry, I would say.
Got it. Also on the QIP process, which will be used for setting up, 3 new facilities, additional facilities, one in Haryana, Rajasthan, and Uttarakhand. Now, when will this go online? Number one, and what kind of peak revenue potential are you expecting from these facilities?
See, we are seeing these 3 new facilities going live by mid of 2026, and that's the plan right now. And we have already secured land for these facilities, and we're getting our necessary approvals to start activities there. But in terms of revenue, I think we have not guided so far, but I think in our industry, if we invest let's say a rupee, normally the turnover is around 1.25 to 1.5 rupees. So we continue to move in that direction, and this industry needs deep capital investment to get more traction, more success. So we are in the same line, and I think we'll maintain our guidance for around 20% growth for next few years, in terms of our growth. So I think we are going to be there. We are very sure.
That's Medicure and some interesting statements by the management as well. But nevertheless, that stock is flattish. It's actually had a decent run the last couple of years, has Medicure. The question only is, can it do an encore of what it has done in the last couple of years. This year, about 76% odd growth as well. By the way, speaking of pharma, Concord Bio, if I'm not wrong, just pull up that stock and wonder if that is doing really well for itself or no. I think I saw that stock move up. Look at that price. Excellent movement. And again, this is one more name which post listing has done remarkably well. Again, a 1-year chart will show you, I guess will show you some very strong performances from Concord Bio as well. So, well, decent one, 12 months, about 56%. I think Rakesh Jhunjhunwala's firm Rare Enterprises has a large stake here as well. So, interesting name. But Agam, the new kid on the block seems to be likely to have a interesting listing.
Yes. Let's watch out for how Unimech will list today. This is the big one today, the final one for this calendar year. Well, you will have about just about 30 more seconds left before we start seeing the pre-open, or rather the absolute open rate for that particular IPO. Now, of course, as we've already addressed before, that this is into aerospace specifically, and it does have a very high moat. You know, the entering of this particular sector is a bit challenging, especially given the kind of capital requirements for the company. But there's also a lot of risk involved. And I believe now you start getting the rates soon on your screen. Maybe, okay, there you have an 80% premium to its issue price. So there you have it. It's listed at 1,400 rupees per share, and it does seem like it's a very, very strong listing, to say the least, because you've seen a doubling. So had you made it and had you got an allocation for this IPO, well, you'll be sitting pretty with a profit around 80% already. The question really is that, do we see a temperance? Do we see a little bit of moderation through the course of the day? Or do you think that these prices could hold? Well, it's anyone's guess for now, but it's certainly looking like a very, very strong listing as far as the debut for Unimech Aerospace is concerned. Again, as we've been talking about since morning, the big advantage for this company is the moat it has built, the sector in which it operates in, and it does seem to have established itself well in this particular place of business. But it comes down to what it can go and do in terms of price action. That's going to be a wait and watch. Again, it certainly is an expensive counter based on what we have seen so far in terms of its valuations. But valuations usually do not have too much of a say, especially when it comes to listing day. But on that note, we will come back to this. We will quickly slip into a short break and be back with a lot more action on the street. Stay tuned in, and we'll be back in just a bit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade.
Back with India Market Open right here on NDTV Profit. Let's talk about some stocks which are in focus. Now, Lupin, as the year ends, we know that Nifty Pharma has been the top performer. Lupin is in news today, Concord is in news today, a clutch of firms are in news today. But the sector at large has had nearly 40% gains as against Nifty's 9%. So, Varsha Johnson, you tell us about what is it that has driven this outperformance for Pharma. Varsha, good morning yet again.
Good morning and thanks to you for that. So as you rightly said, Nifty Pharma is up 38% in last 1 year. Now this is the top performer index. Now this is driven by shift towards safer stocks and performance in the US markets. But let's see what are the key reasons for the top performance. Starting with sector tailwinds, the growth is actually supported by new product launches, high demand for generics and branded drugs, focus on chronic therapies and expansion by API companies. But let's see what are the macroeconomic dynamics that has led to this performance. One is US-China trade dynamics. Trump tariffs on China has indirectly boosted exports for Indian pharmaceutical companies, and of course favorable technical factors also contributed to the index growth. Strong faith in India's expanding pharmaceutical capabilities is also the other reason. If I were to talk about the impact of US policies, Trump's measures which aim to prioritize domestic industries and limit foreign competition will actually not target India. This could benefit Indian companies such as pharmaceuticals by allowing them to continue exports to the US markets, which is actually very important when it comes to pharma companies. Anticipated Biosecure Act has also bolstered sentiment, though it is out of key defense bill. But despite US Biosecure Act, CDMO is what driving the pharmaceutical sector as a whole. If I were to talk about the US revenues for Indian pharma companies, it grew 18.3% year on year in FY24 due to faster drug approvals, robust sales of first file products, pricing benefits from product shortage and easing pricing pressure that we have seen. Rupee depreciation has also aided this growth. Declining rupee provided competitive edge to exports. If I were to talk about the European market growth, so European revenue grew 15.3% in FY24 aided by new launches and tender wins. But though this is expected to moderate to 7 to 9% in FY25 due to base effect and macroeconomic headwinds. If I were to talk about the CDMO and R&D strength, higher focus on CDMO growth has actually led to this rally that we have seen. And now just we'll speak about what to look forward in calendar year 25. Indian pharma industry is expected to grow at 9 to 11% in FY26, led by price hike, new launches in the domestic market, and of course rise in export demand from regulated markets. So these are all the reasons why we have seen pharma as the top performer.
Okay, Varsha, thank you so much for getting us all those updates with respect to how the pharma sector panned out for this particular year. But we move on and talk about Adani Wilmar, which is currently under pressure, by the way. And it does seem like the stock is finally taking into consideration the repercussions of the deal that the Adani Group is going to go through. But we do have a JP Morgan note on this one, on this particular deal specifically, and they're underweight. Let's get in Mahima to tell us more about what this note entails. Mahima.
Right, Agam, so basically JP Morgan has rated it underweight with a target price of 320, and what they've done is that they've tried to explain this entire transaction. Basically, Adani Enterprise will fully exit the JV and Wilmar will increase its ownership to 75%. To start with, there will be a divestment of 13% share in Adani Wilmar to achieve compliance, and in terms of what will happen next, Lens PT, that is a wholly owned subsidiary of Adani Wilmar, will enter into an agreement with Adani Commodities to acquire 31.06% stake in Adani Wilmar, and option price will be mutually agreed upon by the parties, which will be subject to a maximum price of 305 rupees. And overall, Wilmar would acquire the stake for around 12,300 crores. So the entire note explains as to how the transaction will take place, and of course they've maintained underweight with a target price of around 320 for the stock.
Okay, well, thank you so much for that, Mahima. But with that, we shift focus to JSPL, and Nuvama has maintained a buy on this one. We have with us Mihika, who's going to give us an idea about what they are saying on this particular company. Mihika.
Thank you for that. So they've actually hiked the target for JSPL to 1,292 rupees. And this is versus 1,139 rupees earlier, and this implies a 40% upside. Now, in terms of earnings expectations, where Q3 earnings will remain stable because the demand growth has been below what industry expected. However, Q4, you could see an improvement in demand as per Nuvama because of better government efforts, higher steel prices and volumes expected. Even the safeguard duties, potential safeguard duties by the government will help hike prices by rupees 2,000 per ton in Q4 FY25, which is positive and could boost earnings. However, they have reduced their FY25 and 26 EBITDA estimates by 6 and 4% respectively on the back of lower volumes till now. In terms of the missing volume growth for JSPL, it's because of the underutilization of the 6 million ton per annum pellet plant, which is holding key to missing volume growth. However, management is confident to solving the bottlenecks about this plant in Jan of 2025, which is a positive, and this could help ramp up steel production to 8.3 to 8.4 million tons, and this is also key to the volume growth for the upcoming 3.3 million ton per annum capacity steel plant. So ramp up of existing capacity as well as commissioning of new capacity is what's expected to drive growth, and Nuvama expects a 26% volume CAGR over FY25 to FY26 to 12.4 million tons for JSPL.
Okay, Mihika, leave it at that. Thanks so much for taking the time out and giving us those updates as well. Now, on to our guest for the day. And at the end of the year, it's just fitting to get in somebody who looks at the investing space very closely, not just public markets, but more the private markets. Gopal Jain, Managing Partner of Gaja Capital, joins in right now on the show. Gopal, great talking to you on the last day of the year. Thanks for taking the time out. Good morning.
Good morning, Neeraj.
Gopal, how do you view the year gone by? Because in more ways than one, it was a year of unpredictability, both in terms of deal making as well as returns, both for global markets as well as local markets, right? How do you view the year gone by?
Well, let's start with the Indian perspective. I think the year gone by, from my perspective, if you start with the economy, was disappointing because we've ended the economy on a we've ended the year on a downbeat note. Nobody was really expecting the economy to slow down through the year. Public markets have also not delivered stellar returns. I think the highlight has been primary markets. I think the highlight of 2024 for India is primary markets. And, that's showing up in various ways. So capital raising, which is so important for companies, is close to an all-time high. I think from a private equity perspective, this is the year in which exits through public markets became mainstream. This was the year of the big pre-IPO rounds. And all of this taken together augurs very well for the Indian market over the long term. As far as the economy is concerned, it's a mixed picture, right? So on one hand, actually, US markets have delivered very exciting returns this year. If you look at the stock markets, the economy has done fairly well. All eyes on the US right now. It is the big elephant in the room. And in other parts of the global economy, I mean, there are question marks in certain places. But there's overall a huge effort, I think, globally to conclusively emerge from the after effects of COVID and to focus on growth at an economy level and earnings growth at a company level.
Gopal, how would 2025 therefore turn out for, let's say, deal making, and let's start with primary markets, because you struck a valid chord. It's been a year of primary markets from an Indian perspective, and in some sense the market showed that if previously, if a promoter was exiting and a fund was coming in, it was perceived to be a red flag. No longer that the case. Promoters exited, grabbed by mutual funds, grabbed by private equity, and markets rewarded such instances as well. How does that augur for deal making in 2025? That aspect, plus the fact that flows are a bit varied now.
I think over the last few years, private equity has emerged as a preferred supplier of companies to the public markets, right? That's been such a dramatic shift. There was a time when there was a clear preference for so-called, industrial groups and their companies. I remember those times, right? Neeraj, so do you. And from there to a point where private equity is a preferred supplier of companies, and for three reasons: growth, governance, and ESG. So most private equity companies fare relatively well on these parameters, and I would say relatively well to the average, to the benchmark. I think there's been greater understanding that private equity's job is to invest and to exit. So I would say the stigma attached with exiting through public markets should be seen in that context, that the markets have a better understanding for alternatives and private equity, especially in the Indian context. It's coming of age.
Gopal, morning. When it comes to private equity, what sectors and what segments do you think that defined 2024? And among these, what are the areas which are emerging that could take a little bit more importance in the year coming through in 2025?
So if you look at just private equity activity, it's been a flat year for India, right? And I think the backdrop for that is the economy sort of lost momentum through the year. But the underlying trends in the economy are super strong. And what are these trends that private equity is investing in? We could spend a lot of time on this, but let's list the primary trends. Financialization, right? Financialization, the digitization of the financial system is a very strong trend, and that continues. India has a long way to go in terms of credit GDP ratios, etc. Then the emergence of discretionary consumer. I think that's again a very strong trend, and you see a number of businesses being built on the back of discretionary consumer being invested in by private equity, and some of those businesses have started to come to public markets. Within IT services, it's a mixed bag, of course. There are certain sectors that continue to be resilient in the US, and there's been a lot of activity, especially healthcare-oriented IT. There's a new emergence of product companies, right? I think the stage is set for world-class product companies to emerge from India. And what's the reason? The reason is now there's a domestic market for software product companies in India itself. Indian businesses are starting to consume software. So these are some of the primary trends that come to my mind. I think it's important. Of course, we are still one of the fastest growing, perhaps the fastest growing large economy in the world. But all eyes are set on growth to revive, and for some of these trends to come back to their previous trajectory.
In terms of consumption themes that could potentially be in focus?
So again, what's on the top of my mind is really, this shift towards discretionary consumer, right? Of course, recently, last quarter, a couple of quarters, you've seen slowdown in apparel, you've seen slowdown in food, you've seen a slowdown in e-commerce broadly. Of course, quick commerce is showing growth, but that's really market share gain from e-commerce. If you combine the two, there's a slowdown. So there's a certain slowdown in discretionary consumption. Households are rebuilding balance sheets. And interest rates, high interest rates have not been helpful also. The flow of credit, which is now an important factor, in consumption. So when you look at discretionary consumer, credit now plays a very important role in discretionary consumer. I think flow of credit needs to come back for discretionary consumer to revive.
Right, Gopal. So I want you to extend that point a little bit more. So you've spoken about financialization. That said, well, savings in general have become a little bit more challenging for a family in general. We have seen a little bit of temperance and moderation in consumption trends in general, and I'm not just talking about staples, but discretionary as well. Based on some of these trends, do you think that 2025 could pose just the same challenges? Do you think that these challenges could be a little bit more intense as we move in? And under those circumstances, could there be other factors that could potentially, well, play in either favor or against some of these aspects here?
I'm hopeful that in 2025 growth will revive, and I'll share with you the reasons. I think if you look back at 2024, whether it was deliberate or otherwise, fiscal policy combined with monetary policy to end up dampening growth. And you see green shoots on both. I think as far as fiscal is concerned, there's a clear intent. We have a growth-oriented government. There's a clear intent to spend. It's showing up in certain statistics. As far as monetary policy is concerned, it's too early. I won't raise any expectations, but I think it takes me back to the other point that you've raised. I think in some ways, we need to strike a balance between growth and safety. I think in some ways, we're still living in the past. You see, when you're a poor country, households save and corporates have thin profits. But as you become a more prosperous country, households dissave, they spend more, and the savings shift to the corporate sector. So let's say 20 or 30 years ago, the focus of regulation was essentially to regulate the public sector. Now 50% of our banking sector is private. The focus has to shift to striking a balance between growth and security. Securing public deposits, it's no longer a state where deposits are from the households. Now, overwhelmingly deposits increasingly will be from the corporate sector. So I think we have to make a certain shift in our thinking to strike a greater balance as far as regulation is concerned between growth and safety. I think as far as fiscal policy and the government is concerned, there is greater clarity that there is growth orientation.
Gopal, so some of the regulation that has come in yesterday, we also got to know that maybe the regulator has sent notices to 40 fintech firms who are doing the personal loan to public and owned by global parents and trying to understand the nature of the ecosystem, etc., etc. But through the year, we've seen regulation play a very important part, from SEBI onto the capital market players and from the RBI onto the lenders, etc. Was there large overheating which required all of this, and do you think that there's been a sufficient cool off, if you will, into some of the areas which might have been overheated? I mean, some of these things won't come, we will get to know, but the regulator, of course, in their wisdom, have a lot more data as well. But do you think there has been a sufficient cool off in some overheated pockets?
Well, one of India's strengths is that we have very high quality regulators in both the debt credit markets and the capital markets. I think RBI and SEBI have done a stellar job. Just look at their track record over the past years. And this is one of the reasons why India trades at a premium. So they've done a great job. It's always difficult striking a balance between growth, safety, forward-looking, backward-looking. So I think now there is increasing focus that I think there's increasing awareness that we need to start looking at things, from a growth perspective. And I think you will see that. There will always be certain parts of the economy that appear overheated. But I think you have to go back to asking yourself, what's the headline growth number that you want? Right? So if we are targeting a 7-8% real growth rate, let's say you have 4% inflation, that's 11 to 12% nominal growth. And if you have 11 to 12% nominal growth, then that translates into 18 to 20% credit growth. And 18 to 20% credit growth, 50% is private sector, 50% is public sector, which means the private sector has to grow at 25%. And if the private sector has to grow at 25%, corporates are not borrowing, they're they're still sitting on the fence, then who's going to borrow? Essentially, it's retail that's borrowing. So retail has to grow faster than 25%. And so I think if you just cascade this down, then certain answers will emerge more clearly. But we need consensus on what's the growth rate that we are targeting as a nation. I think if you look at India's demographics, if you look at where India is, the opportunity ahead of us, where we want to be in the next 7-10 years, clearly the consensus would be closer to 7-8% growth, not 5-6% growth. And then if you start working backwards, then you have to ask yourself, what is the shift in thinking that is required? What is the new balance that you will want to attempt between growth and safety, given this headline target that we now are talking about?
But Gopal, just a follow up there, right? I mean, you are then we are then looking at a scenario that in order to meet those growth targets, we go out and try and not control an area of growth which is subject to or which could be easily susceptible to bad apples or bad loan, right? Instead, could it be that let's try and get the government capex rolling back again, hope for private capex to come back so that corporate borrowing also grows instead of retail credit growing at a rate northwards of 25%, which might be maybe a bit risky in terms of retail delinquencies coming up?
Indeed, it's a very important question that you raised, and in an ideal situation, all three engines must fire. Right? Corporate capex must happen, government spending must happen, and retail spending must happen. Right? But in the absence of all three engines firing, the focus is on two of these engines, which is government spending, and that is largely in the hands of the government as to how it spends. Hopefully, it also spends in the right areas. There is a huge opportunity for the government to bring back reform. The second aspect is private spending, private sector spending, or retail spending specifically. I think as far as retail spending is concerned, the bulk, there's a huge amount of asset creation. So it's not just about, consumption in a certain sense. There's a huge trend around housing loans, that's secured, and so on and so forth. So we have to keep these two engines going, which is government spending and retail spending, and hope that the third engine of private sector capex spending revives and starts moving. So you're absolutely right. We need to be careful. We need to be balanced. We can't overdo any one sector. But there is enough resilience in the market. I think, we have strong regulators, who have taken contra-cyclical measures, both in public markets and capital markets. And overall, I'm sure we will see a better balance between growth and safety in the coming year. That's my hope.
Hoping for that and more. But Gopal Jain, lovely talking to you. Wishing you and yours a very happy 2025. Thanks for taking the time out today.
Thank you so much, Neeraj. Take care.
Yep. And with that, viewers, it's a wrap on this edition of Talking Point at India Markets Open. Thanks so much for tuning in.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV. Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. It's the last edition of Ask Profit for this year. And it is also Mahima Vachrajani's birthday. So happy birthday. I think a lot of people would agree you've got the best birthday in the year.
Absolutely.
The
Thank
whole
you
world
so
is celebrating.
Yes, thank you so much, Alex.
So you can send her happy birthday greetings on the message on the number that should be flashing on your screen very quickly. I'm sure a lot of you would want to wish her. And you can maybe call us and message her, or rather speak to her directly and wish her on the phone line as well, because that's the number that will soon flash on your screen. All right, on that note, let me take you through how the markets are faring right now. It's looking like a little bit of a somber end to 2024, and you're seeing cuts of about 0.5% as we speak on the Nifty 50. Broader markets also looking a little wobbly at this juncture, and let's pull that up and see how it's looking right now. You have 0.8% lower for the mid-cap index, about 0.4% or so for the small-cap index, as a result of which the advanced decline ratio very firmly tilted in favor of the declines at this juncture. It has in fact closed a little bit over the course of the session so far. In terms of the key indices, take a look at where the sectoral performers are, and right in the bottom of the screen you're looking at IT, which is down about 2.5% or so, a significant underperformance on that front in trade today, and that really should give you a picture of what is coming through. Perhaps to a certain extent there is an inkling that the quarter that we're just getting past is not going to be a great one for the IT companies based on everything that was being factored in. 0.8% cuts for the realty index as well, a little bit under pressure so far this week. You have cuts of about 0.7% for the media index, which is, by the way, the worst performer in 2024. Pharma is up about 0.2% or so, but for the year so far, it really is the best performing sector, and the PSU banking index is the only other index that is more or less in the green, up about 1/3% or so as we speak. Any individual stocks that are standing out?
Absolutely. Some stocks, which are kind of bucking the trend is RVNL or Mazagon Dock. Both of them on the back of order wins. RVNL emerged as an L1 bidder for a central railway project of around 137 crores. For RVNL, it's like every other day new order win and the stock is just, running in trade. It's up 5% as we speak. The next one is Mazagon. It did see a good uptick in early start of trade today, but it's down around 2.3%. But it has signed a contract with MOED Air Independent Propulsion Plug, and the contract is worth 1990 crore. Another stock which is not doing very well is My Trip, where as per sources to Bloomberg, the co-founder is set to sell 14% stake for around 780 odd crores. The stock is seeing a lot of pressure, down around 7.8%. Pratap Snacks is another counter which is not faring out well in trade today, because the Jammu manufacturing unit did catch a fire, and then management has reported that there is damaged inventory, machinery as well as building and furniture. The stock did see a downtick in the start of the trade, but it has come off from its day's lows, trading around 0.7% lower. Adani Wilmar is also seeing some pressure today after the transaction that has taken place. Adani will exit the Wilmar JV, and JP Morgan has maintained underweight on the counter with a target price of 320. It's down around 7% as we speak.
Let's introduce our experts for the day. We've got Mr. G. Chokalingam as well as Swati Hotkar joining in. Compliments of the season, and let me in advance wish you both a very, very happy new year 2025. And actually, before we go to our first caller, Naveen has already called us. Naveen, I'll come to you in just a bit. But I'm curious about what Mr. Chokalingam has to say about how the markets are right now, how valuations are. Because when we spoke to you, Mr. Chokalingam, earlier in the year, you said that things are looking a little uncomfortable. I think we must have spoken mid-August or maybe even before that, when we were at the peaks. And you were saying that you don't see anything that is worthy of putting money in at that moment, right? Has that changed? Are you looking at certain pockets where opportunities arise heading into the new year?
Certainly. Before that, I wish your colleague a very happy birthday. God may bless her, great health and a lot of happiness.
Thank you so much,
Mr. Chokalingam.
So definitely it has changed, because the market structure itself has changed. I was very nervous 5-6 months back on the small cap, because when we spoke at that time, the small and mid caps were at the peak of their valuations. So today, the whole market cap has come down close to 50 lakh crore from the peak. And 2/3 of that fall is from the small and mid cap stocks. And as I said last time also, within SMC, small and mid cap segment, you have two categories. One, the perception driven, like a new age companies with a PE of 80-100 when the profit is growing at 20-30%. Then you have a quality stocks where valuation comfort zone is there, but they were not commanding that kind of PE. So both of them corrected, but the farmer one has corrected even 30-70%. Like if you look at the Spandana Finance, there are many overvalued stocks that corrected or crashed, whereas the quality stocks have fallen anywhere 5-20% on an average. So therefore, my view has changed. I think this is a time to go after quality small and mid cap stocks. Not only the valuation, there is one more reason to believe. The FIs may not come back to the market even in January. Most of them would wait for the budget presentation before taking a big call on India. So therefore, we need to bank on only the domestic investors. Interestingly, even now, around 10 lakh new investors are coming to the market every week. And in my view, majority of them would buy small and mid cap stocks. So therefore, I believe that in the short term, this is the time to look at quality small and mid cap stocks. The phenomenal wealth once again can be created by end of 2025 calendar year.
Right.
I believe in it.
Okay, so we'll come back to you on individual names. For now, let's very quickly turn to the bumper listing of the day. Unimech Aerospace listed at a premium of 90%. We caught up with the management on how they plan to use the funds that they've raised. Listen in.
So we are a high mix, low volume product manufacturer, predominantly into aerospace tooling and ground support equipment and precision components. So the two offerings are aero toolings and ground support equipments, predominantly for commercial aviation. Now we are expanding to defense sectors as well. And coming to precision components, we cater to aerospace, defense, energy and semiconductor industries. They are kind of very high complex and high volume, low volume in nature, and also they come with sub-assemblies and subsystems kind of offerings. And coming to proceeds, we are raising 250 crore of fresh issue, and out of which we are using it for working capital and capex purposes. Capex happens in two phases actually. The first phase with a lot of CNC machines, equipments, and the building, the infrastructure, those aspects, and the second tranche comes in next to 12 to 18 months.
All right, well, that was the management of Unimech Aerospace. The stock did have a bumper listing of 90%. It's up around 74% right now. So it's come off a bit, but still trading 74% higher. Let's move on to our first caller for the day. Naveen from Vizag is calling in. Naveen, thanks for calling in. How can we help you?
Good morning, Mahima, and first of all, happy birthday.
Thank you so much, Naveen.
So I have 700 shares of SpiceJet at around 63 price. Just want to understand a view for the next 1 year. I want to hold it for around 1.5 year.
1.5 year, okay. And when you bought it, did you see the fundamentals of the company?
So my intention was to buy that stock is like as aviation industry is picking up, already Indigo has given a good run up, and the SpiceJet is also planning for a comeback. So in that way, like I'm actually buying the stocks at an average price of 63. Multiple sets I bought it.
All right. Okay, Mr. Chokalingam, I'll come to you on this one. Swati, sorry for keeping you waiting, but since this is a fundamental question, your view on SpiceJet as well as the entire aviation space.
Aviation sector has got a fantastic outlook in India. There is no doubt about it. But SpiceJet, all of us know that it has got its own problem in terms of debt and also the profitability. There is some amount of risk in this, but definitely, there has been a restructuring in terms of shareholding pattern. To some extent, restructuring is happening on the balance sheet as well. And therefore, there is a possibility of this stock bouncing back substantially in a time frame of 1 to 2 years. But it comes with the risk, because by any chance oil price jumps substantially, then the progress of this particularly little stressed company would be impacted. If oil price crashes, I am sure that would help weak companies like our SpiceJet to come back in a big way. So it's a hold or even buy for little risk-taking investors.
Bear in mind, of course, that consolidation has taken place in the aviation industry. 63% of the share is controlled by Interglobe Aviation, and about 24%, if I remember correctly, is controlled by Air India, which now is also inclusive of Vistara. Let's get our next question in. We've got Ekambaraya, who's writing in from Hyderabad and asking about KPI Tech, which he's bought at levels of 1,420. He's looking at a 1 year time frame. He's just about in the green, nosing ahead. But the question is to you, Swati, would you hold?
First of all, good afternoon and good morning, everyone. And Mahima, wish you many happy returns of the day. And in advance, happy new year to all my viewers and the NDTV Profit team.
Thank you so much.
Coming towards the KPIT technology, definitely the counter looks really good on the technical front. On a larger degree, we are witnessing that the stock is under the correction mode and it's facing a strong resistance of 1500 above levels. So as long as it sustains below that level, the view will remain cautious for a shorter period of time. But over a period of time, if you're looking for a 1.5 year duration purpose, definitely I believe the stock has the strength to reach up to again up to 1600 and 1670 levels on the higher sides. So since the market, your position is at the current market price nearby that level, I will suggest to maintain the strict stop loss of 1400 on a downside, and you can carry your long positions for immediate target of 1600, and about that level 1800s can be seen.
Okay, all right. We've got the next caller. I believe Kunal is calling us from Chennai. Hi Kunal, thanks so much for calling us. How can we help you today?
Hi, firstly, happy birthday to Mahima and happy new year to all of you there.
Thank you so much.
Kunal, happy new year to you too.
Thank you. So I have Hindustan Composite as my share today and 85 in quantity. I'd like to know, I just purchased this yesterday and I'd like to know a 6-month lookout for, what I can expect. I would not mind even adding a few quantities to this share as well.
Okay. What stood out to you? It's a very small company. 815 crore market capitalization. Kunal, so what do you to this stock?
Sorry, I didn't get you. Sorry.
So it's a very small company. It's not something that a lot of people track. I'm just curious about what drew you to this stock.
The book value, actually. The book value, the share was something very attractive to me, and I took a call based on that. And also, if you look at the EPS, it's not too far from the industry standard, so I thought it was a good share to invest in.
Interesting. So you bought it on the fundamentals, but you've got a very short-term time horizon. Why is that? 6 months?
Because again, the funds are something that I would like to rotate. So 6 months is what I thought.
Okay. So I got your question. Since it is a fundamental basis based on which you have bought this, let me go to Mr. Choklingam. I don't know if you've got a specific view on Hindustan Composites. It is in the development, manufacture and marketing of friction materials in India. I'm looking at brake lining, clutch facing, disc brake pad. I'm just looking at what the company does. I must confess that I've not really covered the company or looked at it. Have you, and would you say that this is a good investment?
Certainly, people like us cannot miss this kind of stock. No doubt, it's a very deep value stock, Mumbai-based. More than the core operation, it is sitting on a huge investments, very rich investments. It's a good buy also. The only concern is, the value stocks are not taking to a large extent. This market is driven by the young new investors who give a lot of valuation to new age companies and digital companies. So that is the only drawback for this company, whether the attraction would come and people would buy in a substantial way. But otherwise, fundamentally, it's a very sound company. It's smart to identify this company.
All right, so that's the view coming in on Hindustan Composite. We have our next query from Abhineet, who's from Bengaluru. His query is on Tata Power. He has around 150 shares bought at 420 a piece, and he wants to know whether he should average out or hold. Swati, what should be the strategy for Tata Power right now, looking at the charts?
The overall view is a little bit cautious because from the last 3 to 4 months, we are continuously witnessing a selling pressure in this particular counter. We have seen a correction from almost 475 to now 385 levels. Now the stock is just entering into the oversold zone. I believe that 380 is the immediate support level. If it's break that level, then we might witness some more correction, which might take a counter towards to 365, 370 levels. Up to that level, the selling pressure likely to be seen. So I will not suggest to average it out at the current market price. Let the stock find out the support at 365, 370 levels. At that level, you can definitely take a average out positions. Upside can be seen only if the stock manages to give the breakout of 400 levels, which is the previous cluster supports level. So the previous supports will become the today's resistance level. So if it manages to give the breakout of that level, then definitely we can see some sort of a reversal in this particular stock, which might take a counter towards to 450 to 470 levels. So as of now, my view is hold. You can average it out on any dips towards to 365 to 370 levels, but not at current market price.
All right, so it's a hold for Tata Power, and 365 is the price where you can, kind of enter and average out is the view from Swati. We have our next caller, Vishwas from Bengaluru is calling in. Vishwas, thanks for calling in. How can we help you?
Hi ma'am. Good morning, ma'am.
Good morning.
Ma'am, KPI Green Energy 600 world.
Okay.
Average price 900.
Okay.
Hold or sell, ma'am?
What is your horizon? How long can you keep holding these shares, and when did you buy them?
Madam, short term 6 months, ma'am.
Okay. So 6 months is the time frame that you're looking for, or you bought them 6 months before?
Yes, ma'am.
Okay. All right. Swati, I'll come to you on this one. KPI Green, how does it look on the charts?
Yeah. As of now, the view is a bit cautious. It is just under the consolidation phase within the range of a 750 to 850 levels. Within that 100-point stage, the stock is under the consolidation phase. Volumes are a little bit increasing. Upside, if it manages to give a breakout of 850 levels, then we can witness some sort of a reversal in the trend, which might take a counters towards to 1000 levels also. So I will suggest to hold on this particular counter because it's no need to book your losses because the counter is trading nearby the oversold zone. So over a period of time, we might witness some sort of a reversal in the near future. So it's a hold from my end. If you're getting any rise up to 900 and so levels, you can exit your long positions and book your profits.
Okay. We've got a very interesting name here. The next question is from Xerxes Valentino Cardozo. What a fantastic name you have, Xerxes. You've got a question on Axis Bank. You're holding a significant quantity, 19,873 shares. I hope I'm reading that right. You've bought at a price of 1,170, which is above the current market price. And you've got only a 1-year time horizon. You're sitting on some losses, but you're wondering whether to hold, essentially. It's down about 3.5% in the year to date, or essentially over the last 1 year. Swati, on the charts, what are the kind of prospects for Axis Bank over 1 year?
Yeah, as of now, Alex, I can say that the stock has shown a retracement of whatever the rally we have seen in the start of 2024 from 1,000 to 1,300 levels. Now the retracement has completed almost 100%. I believe that the stock may find out a support nearby 990 or 1,000 levels. So the downside is limited from the current market price. I will suggest to hold on this particular stock. If we are getting a very good momentum into the banking stocks in the large cap back, this will be the one counter who will show the first sign of a reversals, and the upside target I'm looking for initial will be a 1,200, and beyond that again 1,300 can be tested. So for longer term horizon, definitely it should be a hold into your portfolio.
All right. Xerxes, hopefully that answers your question. You and I have something in common. Both of the names of the people that were named after were called Xerxes the Great and Alexander the Great. So that's trivia for you. Gul from Kerala wants to know about this. By the way, he's wishing you happy birthday.
Yeah.
He wants to know from Mr. Chokalingam the best pharma stock to buy for a 6-month to 1-year time frame. By the way, the pharma index, as I pointed out at the start of the show, has been the outperformer in 2024. The Nifty Pharma Index gaining more than any other sector. Mr. Chokalingam, turnaround seems to already have happened for the pharma index as a whole, for the pharma stocks as a whole. But which one would you buy for a 6-month to 1-year time frame?
Yeah, at this juncture, for 6 months to 1 year, considering the relative valuations within the pharma sector, I would strongly recommend FDC Limited. We have a buy recommendation on the stock, and more than 2/3 of the business is from the domestic business, and which is growing in double digit. Strong balance sheet, a lot of cash on the books, and I believe FDC most probably should be one of the best stocks to consider.
All right, so that's the view coming in on FTC. We have our next caller, Shrikant from Hyderabad is calling in. Shrikant, thanks for calling in. How can we help you?
Yeah, hi.
Hi.
Yeah, actually I'm holding 150 shares of IREDA.
Okay.
From past 6 months. I need to hold it or exit.
Okay. And how long do you want to continue to hold it?
From past 6 months.
No, but time horizon as in way forward, how do you intend to hold it? Another 6 months, 1 year, or for a longer term perspective?
Based on the breakout, if I am holding up to 6 months, what will be the next return in that?
All right. So you want a technical view on this. Swati, I'll come to you on this one. IREDA, how does it look on charts?
I guess if I'm not wrong, the client has bought it nearby in the month of the June or July, because at that point of time we have seen a peak of 310 levels. As of now, we have seen already the retracement in this particular counter. The stock was trading in the downward sloping channel. Now it's on the verge of giving the breakout. So downside is very limited from the current market price, because slowly and steadily we are getting a reversal sign on the technical front. On the higher side, as of now, 240 is acting as a crucial support levels, because from the last 3 months, if you check the charts, the stock was not able to manage to give the breakout of the same levels. But I believe, looking towards the technical structure at the current in such kind of a scenario of a market, this particular counter has just hold its levels on the downside. So over a period of time, we are likely to witness a very good amount of breakouts. Any move above 240 level will take down a counter back towards to 270 to 300 levels. So it's a hold from my end. I will suggest to hold on as long as this particular stock holds the level of a 190, can be kept as a stop loss for an immediate target of 270 to 300 levels.
Okay. Hold is a call on IREDA. Shiva is calling us from New Delhi. Shiva, namaskar. How can we help you today?
Hi Shiva, hello, hi. So I'm having ATGL shares of around 39 with an average price of about 886.46.
Okay.
Currently I'm trading at loss. I'm at loss of 6,254.
Got it.
I don't see any news related to Adani Total Gas specifically.
Yeah.
I don't know whether to hold or sell. I'm thinking of in longer perspective.
Longer perspective, okay. So, and you bought it based on the fundamentals, I'm sure. Mr. Choklingam, Adani Total Gas hasn't recovered to the high point of the year. And so, from that perspective, some people would say is a good opportunity to look at. But what's your perspective on the fundamentals?
Yeah, this valuation is slightly stretched, but one can definitely hold for long term. Adani Total, that's my firm view.
Okay. Okay, so let me also go to Swati on the technical level. Since he's bought at slightly elevated levels, 886 or thereabouts. What are the prospects on the charts for the long term?
Yeah, Alex, if you look towards the last 3 to 4 weeks data, the stock has given the foundation of at least 650 levels, and from there onwards, we are witnessing a good amount of a rally. Yesterday, we have seen a very good spike with the volumes, and I believe if such kind of a strength remained intact in at least for coming 1 to 2 trading sessions, as the stock is well placed above the short-term moving average as well. So the immediate support lies at 700. I will suggest to maintain that support level 700 as your stop loss, and you can carry the long positions. And I believe this pullback rally can be extended up to 820 and so levels. So sell on rise strategy should be applied. On the technical front, for a larger degree, I don't believe much more momentum can be seen and good amount of a trend on a higher side can be seen. So it's a sell on rise strategy should be applied on every rise towards to 800 levels.
Okay, Shiva, hopefully that answers your question. The standard disclaimer that we have to give you is that we just spoke about an Adani Group stock. This is NDTV Profit and part of the NDTV Group owned by the Adani Group. We have to slip into a very quick break. We've got more questions that we've lined up on the other side, and you can also call us to maybe wish Mahima from your end. We'll be back before you know it. Do stay tuned.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss
Hi, welcome back. You're watching Ask Profit. This is a show that gets you answers to all of your stock-related questions. Let me very quickly take you through what's happening with the markets. Since we started this show about half an hour back, we've actually recovered some ground, and we're off the low point of the day, certainly for the Nifty 50. It's about 0.5% higher from the low point of the day. Even the broader markets are actually recovered 0.6% from the low point for the mid-cap index and a little over that for the small cap index. All still trading with cuts at this juncture, but lower than it was before. Let's take the first question on this side of the break. We've got Deepika from Hyderabad who's asking about Bharti Airtel, which she has bought at levels of 1,611. Slightly elevated levels, and so she's incurring a little bit of a loss. She's asking if she should hold or sell. Mr. Chokalingam, on the fundamentals in the telecom space, how do you like Bharti Airtel? It has managed to improve its ARPU, its average revenue per user, by taking those price hikes earlier in the year, and the anticipation is perhaps next year they'll be trying to do more of that. So do you think that earnings will improve, and from that perspective should you add more at this point?
Certainly yes. The long-term outlook for mobile telecom looks too good, and Bharti Airtel has been doing quite well in the recent years. However, the stock has rallied a lot. Therefore, I would suggest it's a hold for conservative investors, because I am expecting the telecom tariff to be revised upwards steadily over the next 1 to 3 years. Even the government would participate in the rise in the telecom tariff, and there would be a need to improve the fiscal prudence. So telecom sector could be one of the sectors to participate in the upside of telecom revenue. So considering all that, it's a good hold. If there is a small correction, one can buy. Definitely, it's a very safe stock for the conservative investors.
Right, so good to hold is the call on Bharti Airtel from Mr. Chokalingam. We have our next caller, Abhirami from Chennai is calling in. Abhirami, thanks for calling in. How can we help you? Hi Abhirami, can you hear us? Okay, I think we cannot hear it. Let's take our next query from WhatsApp till then. We have taken Deepika's query. Okay, SBI Life is the next counter, and Tara from Pune wants to know as to what will be the expected return from SBI Life by 2028. She wants to put her money, and she's bought it at the levels of 1400 is what she's saying, and she's saying that since then it's been sliding down. Mr. Chokalingam, I'll come to you again on this one. Do you think that she should continue to hold the counter till 2028?
Personally, I have more confidence in stock like HDFC Bank or ITC, for that matter, even Indigo, within the large cap space, to say confidently that one can anticipate a decent return over next 2 3 years. That kind of confidence I don't have in the life insurance business because yes, it's a good stock to hold, no doubt at all. Whether one can definitely make a very decent or impressive return 3 years, I have my own doubt. The competition in the life insurance has increased substantially, and also there is some pressure in the industry on the margin, and this industry is not able to show consistent double-digit growth over the years. So therefore, I would recommend the stocks like HDFC Bank or Indigo or ITC.
All right, so that's the view coming in on SBI Life. I think we have Abhirami back on our line. Abhirami, can you hear us now?
Yes, ma'am. Good morning, ma'am.
Good morning. What's your query about?
I buy Tata Steel in 143 rupees per 100 shares. Can I hold or sell, ma'am? That's mean I suggestions, ma'am.
All right. Do you want a fundamental view on this, or do you want a technical view on this one?
What, ma'am?
Do you want a fundamental view? Do you intend to keep holding this from a longer term perspective?
No, ma'am. I want fundamental view also.
Okay, you want a fundamental view. Mr. Chokalingam, I'll straight away come to you on this one. Tata Steel, what's the view like?
Short-term outlook for steel industry looks a little bleak in India. We have seen the recent data ending with November, October. There's a lot of import of steel product, and exports have come down. The realizations are under tremendous pressure. So I'm negative on Tata Steel in the short term.
Okay, all right. So that's the view on Tata Steel. Abhinami, hopefully that answers your question. Credit Access Grameen, it's been under a little bit of pressure. In fact, the entire space, the microfinance space, has been under a little bit of pressure, down about 1%. Let's pull up the slightly longer term charts if we can, and that'll give you some perspective, right? So it's down about 44%, and we've got Sundaresan, who's bought at levels of 422. He's still in the green. And it's a doubler for him, but it's down about 44% from even what it was at the start of the year. So, Mr. Chokalingam, would you hold on to something like this if you've acquired at levels of 422?
If I'm not losing money, I would sell the stock because I'm negative on entire microfinance, small finance banks. And that is because the whole industry is going through financial sector is going through tremendous pressure in terms of growth. So compared to FY24, FY25, it has moderated a lot. So I believe that these kind of businesses will continue to have pressures. So I would maintain the sell rating on Credit Access.
All right, so that's the view coming in on Credit Access Grameen. We have our next caller, Sai from Hyderabad is calling in. Sai, thanks for calling in. कैसे मदद करें आपकी?
जी मैंने ये स्टार हेल्थ इंश्योरेंस स्टॉक लिया था एट द रेट ऑफ 21619. तो मुझे 100 शेयर्स.
ठीक है.
तो मुझे होल्ड करना चाहिए. मैं लॉन्ग टर्म पर्सपेक्टिव के लिए रखा था ये स्टॉक, लेकिन 25% लॉस दिखा रहा है अभी.
ओके, आपने कुछ स्टडी किया था ये कंपनी के बारे में इसको खरीदने से पहले?
कंपनी से स्टडी नहीं किया था मैंने.
ओके, ठीक है. मिस्टर चोकलिंगम, आई कम टू यू ऑन दिस वन. लॉन्ग टर्म पर्सपेक्टिव फॉर स्टार हेल्थ.
Yeah, you can hold. The stock has already corrected a lot, and of course, it may contradict to what I said for SBI Life. But then, in the case of Star Health, the erosion is huge already, and also it's quite aggressive on growth. So, considering these two factors, one can hold for long term.
Okay, hold for the long term is a view. Hopefully, that answers your question. Sai, right? It was Sai, I think. Yeah, Vinod has got the next question. Spandana Spurti is the name of the counter. And Swati, he's asking whether it can be bought at the current price. In fact, he's asking about 2 counters, but we restricted to 1 per viewer. So I'm going to stick with Spandana Spurti. Would you buy at this point?
Alex, already the stock has shown a very strong retracement in 2024 from 1400 to 320, 330 levels. This year was also not good. Quarterly, the stock has not given a performance, whereas it has just shown a negative marking of 50% on Q-on-Q basis. If we look towards only the price action purpose, definitely risk-reward ratio will be favorable, but there is nothing much trend reversal I can see at the current market price. If you want to play the price action momentum, yeah, definitely then you can go for a long, but strict with this stop loss of 310 rupees on the downside. I'm giving a very tight stop losses, and bounce back rally can be seen up to 400 and 410 levels. There is no major technical setup I'm looking forward for a longer term horizon. Just for the coming, taking into consideration the price action, you can take a risky bet at the current market price.
Okay, it's been a rank underperformer, down about 70% in the year gone by. We've got Dheeraj calling us from Hyderabad. Hi Dheeraj, good morning to you, and how can we help you today?
Hi sir, good morning. Advance Happy New Year.
Wish you the very same.
Sir, I'm holding MapMy India shares, 55 shares of MapMy India shares at 1845 levels.
Okay.
So at current levels, can I add some more shares? Like the current price is around 1585. So
yeah,
could I add some more shares, like around another 55 to 60 shares at current levels?
So when you bought this, Dheeraj, did you think about the long-term prospects, or did you buy it for a year or less than a year?
Less than a year, sir.
Okay, so it was a tactical call that you made. Unfortunately, the stock has done a little bit, has had a little bit of a poor ride towards the end of this year, and you've lost ground. Let me go across to Swati on the charts then to give you some perspective. Swati, 1844 elevated levels, we know about the fundamental developments in the stock as a result of which it lost ground. But would you suggest making further purchases at this level?
Alex, frankly speaking, not at the current market price, because whatever the rally we have seen from 2023, almost 1,000 to 2,500 levels, now stock has retraced up to 61.8%. That is a very golden ratio we carry out on the technical front. And the stock has even the breakdown of that levels, which is a very cautious point on the technical front. I believe such kind of selling pressure is likely to be intensified in the near term as well, and might take a stocks towards to 1,400 levels. So I believe more 200 points corrections can be seen. So not to buy at the current market price. Let the stock correct down more on a downside, and if it's find out a support nearby 1,400 and so level, at that point of time, again you can take a review on this particular counter. Then we can definitely give the short signal to take a buy call or not. But at the current market price, my view is a little bit cautious on this particular stock.
Alright, so that's the view coming in on CE Info Systems. The next counter is Reliance. Jyoti from Dubai wants to know the correct levels to enter Reliance. Swati, I'll stick with you for this one. Will this be the right point to enter Reliance? And if yes, what will be the stop loss as well as the targets?
Remember, Reliance as of now just is testing its previous supports, initial lows of 2024. So the stock has shown a very good kind of a retracement. Also, the interesting fact that it is trading nearby the oversold zone. So more selling pressure cannot be witnessed in the near term. Once the Nifty manages to give the signs of the reversal, this counter will also show some sort of a positive momentum during the day. So as of now, definitely you can go for a long positions, but not the full-fledged positions. Whatever the quantity you are planning to buy at least 20 to 30% at the current market price. If you're getting any dips to